There we go, everyone. Thanks for joining me. I do have a very special guest today. I'm excited to bring him in, but first, as a reminder, I'm Rob Tatro from robtatro.com, portfolio manager here at Canaccord Genuity Wealth Management and at the Tatro Wealth Advisory Group. Really excited with our guest. I'm going to bring him in right away here. None other than, I call him KV, but Kevin Vandermeer. He's a CFA. He's a fellow of the Canadian Securities Institute. He's also managing director, investments and advisory solutions at Canaccord Genuity Wealth Management. Kevin, thank you so much for joining us and welcome.
Thank you for having me, Rob. And it's great to be.
I do have another slide here. This is probably my all-time favorite slide. I love this slide. I'll pull it up on full screen.
Yeah, this slide I sent out. It's somebody put this together, and I think it's just a really good way to kind of finish a presentation. But and you can't really read what's been posted here, but the title of the slide is Reasons to Sell. And so you have all these events along the line of the market going up, and they're all really good reasons to sell. Whether it's the credit crisis, whether it's situations geopolitically around the world, Trump getting elected, all kinds of, kind of really bad events. And you can see that the market continues to go higher. And even in the face of this pandemic, we see again that the market is recovered most of the losses. And we could see the market go to an all-time high before the end of the year. Certainly, probably next year it will go to an all-time high. So, the title of this slide is a little bit tongue-in-cheek, but the idea is, you want to be in the market. You want to you want to spend time with somebody like Rob and his team, where they can assess your risks, understand the financial goals, understand what you're trying to accomplish with the money that you're saving, and make sure that you have the right kind of setup in terms of asset mix, so how much you have in equities and bonds, so that you can stay in the market, so that when the market does pull back like it did, you're able to kind of withstand that shock. And let me tell you, there's going to be other things that are going to come, whether it's instability between the U.S. and China. This starting to percolate here a little bit. Obviously, the U.S. is unhappy with the way China's dealing with Hong Kong. You still have North Korea percolating. We have a U.S. election that may surprise the market. There's instability in the Middle East. There's always going to be challenges. The key is that you want to stay invested to benefit, to overcome whether it be inflation, but over time, markets tend to go up, and you want to capture that to meet your financial goals. And so that's really the point of that chart, sort of like I said, sort of in a satirical way, if you will. Reasons.
Yeah, I love it. We used to use one that was it's called 60 years of bad news or something, or 80 years of bad news. And it was like compound growth of 12% on the S&P 500 or whatever it was, and it was like Gulf War and Cuban Missile Crisis, and it went all the way back to the world wars and recessions, and you want to be invested. There's one question here that I'll take if you have time. I'll just show you this one, and let me know if you can comment on it. The air slide travel is from Peter. Is a good indication to perhaps put the money into airline travel stocks for the long term. I can touch on it quickly if you want, or you go ahead, Kevin.
Yeah, I would say so. Look, we try to stay away from individual stock recommendations here, but we don't own any airlines in our portfolios, partly because we don't have a really strong view and good visibility on kind of what capacity could what it's going to look like. We've showed you a forecast, but I would say if you are excited or you want to take a shot on airlines, I would suggest that you buy an ETF or buy a basket, because there are going to be some airlines that probably don't make it, and you don't want to be you don't want to pick the one that doesn't make it. Yeah. So, the correlation between Air Canada, Delta, United Airlines Alaska Airlines, all the correlation is going to be very high. What I mean is it's going to move as an industry, and it'd be better to just own an ETF that captures most of those names and you can play it, where there might be some that don't make it and are bought for pennies on the dollar. And as a result, you just don't want to pick that one. And then I would argue, if somebody's making a strong case, to just be a bit skeptical of that, because to be honest, we just don't know what it's going to look like. I know from internally, our bosses are quite happy that we're not traveling, and the most profitable parts of some of these airline businesses is business travel, because we tend to be less discretion, like kind of less price sensitive, and how quickly that bid comes back. Yeah. Over to you, Rob.
I would just echo all that. I'd say again, Peter, or whoever, we're not here to give investment advice. Just know that if you are buying into airline stock, now that's a risky proposition. Make sure it fits within your risk tolerance. Make sure it fits within your asset mix and your long-term plan. And I'd say make sure it's a portion of money that is speculative and that you could afford to lose, because we would hate for you to put everything in the airlines and then they actually don't come back. That would suck. So again, we're not here to give you investment advice. We're here to talk about stories and talk about more general topics. And don't take this as investment advice, as a disclaimer.